Test. It looks like I am live. We're good. All right. So what is going on today, August 15th for crypto? Man, I was bummed. Truthfully, I lost 1.5% of my portfolio. Last week, I gained 4% of my portfolio. This week, starting this morning or last night, I ended up losing 1.5% because I had some limit orders in for Bitcoin and Ethereum. Ethereum, I had orders in for right over the previous high, right at $2,009, because I had a good feeling that if we were to go break above the $2,000 mark, that there was no real resistance in the way all the way up to the $25,000 mark, right? There was very minimum amount of resistance there. Well, boy, was I got stopped up. That's why it was important to have stop losses on Bitcoin. I had a bigger trade in on Bitcoin. I had a full-blown 1% of my account on Bitcoin, and I had another limit order in right there, right above the $25,000 mark. So I got filled. And again, I was like, there's real nothing in the way to 28,000. I had a stop loss in right below the last low there of that daily. And I felt pretty good about it, because I was on a winning deal. I won the last 4 trades. So I was like, oh, these will be good. These will be good. And instantly, the market manipulated and got rejected at $25,000. So I guess we'll start right at Bitcoin, and I'll show you my thoughts of what's happening with Bitcoin. Yeah, we did need some sort of a healthy correction to kind of, I guess, other people to load bags. But we're still in that uptrend, right? We're just bouncing off of the support here of 24,000. And where am I finding that support? Okay, that support is made from back here a couple years ago from December. So it's stronger than we think it is. Yeah, B Baker, dude, man. Sorry, I'm interrupting the stream because let's just call for what it is. Damn it, I misspelled losing. I had LOOS and it's actually LOS. Damn. At least I'm good at making money, because spelling is definitely not it. That's actually rather embarrassing, but I appreciate it, dude, for. Thanks, B. Baker, for having my back on the grammar. All right, well, let's just continue on and finish it, and I'll change it once the stream is over with. Oh gosh. Okay, so that's where I'm getting the support from. All right, and it's a very pivotal moment for holding the support, because if we lose that support, it's a psychological level that boom, we're going down. And if we break below 22,000, well, this is now, again, you hear me talk all the time as far as being a trend trader, higher highs, and higher lows, lower highs. Well, what would that be? That'd be a lower low. We did have a higher high. As much as it looks as shitty as it is, that is a higher high from the previous daily, okay? Yes. I guess I'll be this guy and, show that it's 1% higher than it was, yesterday. So therefore, it's telling me that we're still in that uptrend, okay? So I've actually had another limit order in right under 24,000. And before I went live, the limit order got filled, because you could see here the daily low is 23,862. And the same thing for Ethereum is I had a limit order in under 1900, because that 1900 for me is marking good support. But I'll go back to Bitcoin here. So it's just simple, guys. What I want to try to show you guys is just make things simple. Don't overcomplicate complicate it, because if you can do repetition and go slow and just have it be simple, you're going to be okay. All right. And stops are incredibly important. You know, if I'm looking at stochastics, we do have a cross down below it being overbought, and so, you know, there's that correction for you. Yes, delayed indicator. But what's also interesting is I love these EMA ribbons. You know, I do like moving averages, even though they're, again, delayed indicators. You know, I love the 9-day. The 9-day is probably one of my favorite moving averages, right there with the 20. It makes a perfect little gap for you to, you know, buy in and have it bounce off of. But here, we'll just use the 2025. You can find this on TradingView. It's called an EMA ribbon, right? So you just do EMA ribbon and the 9, 20, 50, 200, and then you could change them if, you know, you really don't need to see the 200 because it's just flying out there, right? That's really the line in the sand that says, hey, we're in a bull market. You know, don't short, right? And I'm over here going long when we're underneath the 200, you know, oxymoron right there, you know, shame on me, but that's what it is. But you can see that we're squeezing, right? And it's because they're starting to flip. They're starting to flip to be in the correct order, you know, where you have the lower moving averages on top and then the highest ones on bottom. That is good, because if we look back in, you know, when we're more of in a bull market, those flips always indicate a move up, right? Move up, okay? Those flips are very nice, especially when they flip down. It's kind of telling you to short. So those are nice to have it squeeze off, okay? We like having the light ones on top and the thick ones on bottom. Again, that's just the 200 here. I'll just open it up for you. Right? Light ones on top. Oh, gotta get back there. So we'll go back here. And what is happening? We got the dark ones on top. Dark ones are on top, and we're getting ready to flip those, right? They're starting to flip. You can see that they are moving down. The red one, the thicker one, is now moving, right? You know, it's enough to go off of that, right? Boom. That's all we need to know there, which is an indication of, boom, a bull. I guess now let's go move backwards on here to see from, I guess I'll do from the 12-hour. 12-hour, it already flipped, okay? It flipped back here on July 26th, and we've been sitting up there on the 12-hour. On the 8-hour, same thing, July 27th. Did I say 6th? July 27th. 4-hour, you know, we flipped on August 10th, right? Boom, boom, boom. 1 hour, we flipped below here last night. So now we're waiting for another boom to flip. I guess you could kind of use this as a buy-sell signal, but it's hard. It's really hard, because by the time this guy actually shows that it's flipped, you know, like look at this, right? Because everyone wants to rely on one indicator, and you can't really do that. So look at how this thing flipped. Flipped here, but what happened to price after it flipped for a little while? Boom, boom, boom. If you would have entered, you would have lost money and potentially getting stopped out, and before it went back up, because the real move was a few hours below, or, you know, previously. That's why these things are hard. They're good looking backwards, but the move has already pretty much happened by the time they flip. That's what makes it hard, because you're looking for something that boom, boom, boom happened right away, and it didn't. Okay. So that's why moving averages are fun to look at, but they're not the best just to primarily trade off of. So you want to just look for price, action, and movement and volume, and kind of it's a finesse kind of a game. All right. So truthfully, I am waiting for a big move to happen, because I think a big move is going to happen. Let me get rid of that. Whether it's we bounce off this 24,000, which I'm betting on, right? You know, again, I'm betting 1% of my account that we're bouncing off this sucker and we're going to my price target of 28. Okay. But it's also a chance that we break below, and yeah, maybe we find support there at the $22,000 mark and bounce off of. I'll still be in the trade if that happens. But if we go much below the 20,000, I'm going to get stopped out and we're going to make a new low. So here, let me just get this out here so I can show you a little bit more. So boom, boom, boom. We'll just follow this, right? I'm betting this to happen. And what may happen is we do this, and then that's a new lower high. So then boom, what happens again? We have another new low, and then maybe another bounce, and then we're heading down to that $17,000 range, which a bunch of investors are waiting on the sideline hoping that to happen, because that's a massive amount of opportunity to potentially buy in. I know I've got some limit orders in way down here. I don't really think that that's going to happen, but I'll be happy if those things get filled. This is not a trading zone for me. This is a buying zone for me, just to buy and hold for freaking damn near ever. And that's where I'm planning on that going. But I am still dollar cost averaging in my investment account. I don't know if you guys follow me a lot. I like to invest a lot. You know, trading is a hobby, but investing is something that I really, really do passionately like to do. So I do lots of stocks, you know, lots of index funds, and obviously crypto. If you don't know much about me, you know, you can see me on TikTok. I talk a lot about that stuff, even on my Instagram. And my portfolio right now is around $500,000, where it's split 60-40 between stocks and crypto. And I've worked really hard to get that stuff up. And truthfully, it's come from, you know, $25 a week, $25, $100 a week, right? Sounds ridiculous, okay? But it's called compounding interest over the last, you know, 5-6 years, right? So that's how you get wealthy, is you just buy and hold forever. Trading is fun and sexy, and yeah, you can have exponential gains quickly, but you can also have exponential losses as well. So on Ethereum pretty much follows Bitcoin, right? So I've been stair-stepping up my trades. You know, this is where I won, and now I finally lost to have it breaking it down here, because I was expecting it, boom, bounce above this guy, boom, 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 we're going to $2,500. You know, but you can't win all the time. That's just kind of what happens. Thank God I had stops in, because you don't have stops in, I would have lost 5% of my account, which, you know, damn near would have wiped out 80% of my profits that I've made, you know, since, gosh, you know, July. That's like a month of work to have it be wiped out overnight. That sucks. That absolutely sucks. So I'm filled right now, 1,900. I'm expecting holding on to the sucker till 2,500. Again, I'm going to get stopped out if we break below relatively the 1,650 right here on the daily, and because it's going to be a new low. But I'm betting that we get to 2,500. All right, is this the right one that I want to look at? Dun, dun, dun. Because boom, so there we have it. That's what I can show you. I'm risking 1 to make 1.5, basically. Okay, you know, that's good risk management for me. You know, obviously you want this to be much higher, right? But that's where I decided to put my stops to be safe. All right, you can trade differently, much differently, but I would advise everybody never enter a trade that is less than 1. Because it's just poor money management, all right? So anything less than 1 is bad. But other than that, I know I saw a rounding bottom on Solana, and I'm not sure, was it on the weekly? Because they all look, they're all following Bitcoin, you know, so, no, that's not it. Was it on the daily? It was on the daily. Here's that rounding bottom, right? And it's doing the same thing. Right around the $44 mark is the line in the sand. This is a trade that I'm interested in as well. Is this $44,000 mark? 44,000? What the heck? $44 is the line in the sand here, because we've got a rounding bottom, okay? And I could typically, what you do is you'll go from the very bottom of that, and then you can go up here to test it, and then look at that. It matches right with a level of resistance at $78. Okay, that's a pretty good trade that potentially might happen on the daily. If Bitcoin and everything break out, this guy is going to break out too. We've had a false breakout right now on Solana. Yeah, this is honestly, I might look at this trade too. Dun, dun, dun. All right, because this was a fake out. I'm not sure if we'll break back out, because if we were to fall back, where do I think we could go? You could even say that this is a rising wedge, right? And typically these suckers break out, and you could do the same thing, with these. You're going to get the same result. I just was showing you two different patterns, but that is damn near identical to what I was showing. All right, price target, again, that's $78 here. So if you were to wait for the daily to break out, because again, it'd be nice for you to break out and, actually show that it's not going to get rejected, because that's what happened on yesterday is, okay, Johnny, shut up. Let me show you this. If I would have saw this trade earlier, what would have been the smart thing to do? All right, so boom, it broke out of this rising wedge, and then we have a candle that closes above it. You could have entered here, right? That would have been smart, or you could have waited for the next one to close and then wait for it to break out at the bottom, at the top, right? You would have entered here, you still would have lost, all right? But that would have been the safest way to go about this, would have been to enter right at $46, and it did end up going up for a while and then ended up retracing down, all right? Opened right level, and then it went down. Dun, dun, dun. Okay, so now that I showed you how I would set that up, let me just show you, if I take this trade again, what am I looking at? All right, so since this is on the daily, we've got a low here, higher low. This is where I'd want to put my stop, is right around, this level, okay? Maybe right below. Yeah, I could get away with having it here because this is really going to be that lower low, but you get these nice little wicks that end up effing taking you out, and it sucks because you just bounce right off of it. So I'd make it a little bit lower below there. Boom. So that's where I put my stop. Okay, and let's just break out here. Let's say I open. Is this a trade that's worth taking? Dun, dun, dun. 1.76. I thought it'd be a better risk versus reward there. If I were to move my stop where I was originally thinking it, I'm at the 2-to-1. 2-to-1 to me, that sounds like, okay, I might look at opening this one because this one looks appetizing. Even though that we've got this, I guess let's look at the volume here. Well, first the EMA stuff. We're just bouncing off the 9-day. I'd almost like to see it get in here to the cradle. And then there's nothing in the way of resistance. Maybe, right? I got to zoom out for it to see it. No, there's nothing in the way. Nothing in the way until we get to there. I like that. I like that a lot. All right. So how do I set stuff up for this? Let me zoom in. Turn this off so you guys can see. And I'm gonna move this guy up to here, and then I'm going to add an alert, right? I'm gonna have crossing once per bar. My message, I leave my messages the same because the message is actually what's going to show up on my cell phone, and I'll be able to tell from there. But I'm gonna say Solana breakout on the daily. All right, and I'm going to copy that, turn the alert name, gonna create it, and that's going to tell me, boom, let me put that in there, and I just got knowing that, hey, alert, you know, we've got it open here. And what is that going to be? That's going to be at 46, relatively $47, and might open up, you know, Bybit and put in a limit order to buy right at the height again, which is around that $46, $47 mark. If you're following me, you can see down here $47, $46 mark, and put in about, like I said, 0.5% of my trading capital. All right, you got to have good risk management. I would say really you never want to risk more than 2%, but I do know some really successful traders that risk up to 5%. Simple way to do it is, hey, you're having $100, right? You know, and you just times that by what you're willing to risk. So 1% is going to say $1 on 100. That's simple math, right? You know, you have $200, that's $2, blah, blah, blah. If I have a $100 account and you heard me, I'm going to risk about half, right? Then I'm risking 50%, okay? But if I have a much bigger account and I'm risking, you know, 0.5% there, you know, boom, I could trade something up to $5,000. Okay, that's why compounding interest is incredibly important, and that's why it takes a while to get a big account going, and that's why people like, you know, like the whole day trading rule is 25,000, because what is, you know, 1% of 25,000? $250. Those guys risk $250 or maximum, you know, $1,250, right, for a 5% deal. That is incredibly risky, you know, because if you lose 5 divided by 100, you can, you can only lose 20 times before you're liquidated. And if you lose, this is fun math too, is you have 100% account, right? You know, it's funded 100%. That's your money. Whatever this subject is, it's whatever it is. Could be $1 million. You have a 50% loss, and that brings your account down 50%. Well, do you need to just make another 50% to get back up to 100? So here, 100, you know, minus the 50% because you didn't have stops or whatever, you know, your account, you lost 10 times. Now your account's 50. Do you need to make another 50% to get back up to 100? No, because what is 50% of 50? Shit. That's point. Crap. Sorry, guys. Sorry. Math here, calculator. I'm going too fast. 50 times 0.5. All right, that's 25. Okay, so yeah, your account was at 50%, and then you had you gained 50% of your portfolio. Well, now you're up to 75% of what you had before, right? So if you lose 50% of your portfolio, you have to make 100%. You have to double your account to get back to even. That's, again, why I say if you're risking money, you know, you want to risk only 1 to 2%, okay? Because how many times can you lose if you're only risking 2%? You can lose 50 times if you're risking 2% of your portfolio. You know, 100 times if you're risking 1% of your portfolio. 200 times if you're risking 0.5% of your portfolio, right? That's just smart money management, and that's what people need to realize. But I see so many times, you know, people hop in, and especially the ones that make money, like right away, is they've got whatever, $1,000 in their account. They're going to leverage, you know, 80% of it. And yeah, the gains, if they win, are great. And But the math says that you're going to lose at some point and you're going to lose big. And a lot of times I see people do is add to losing positions. You never want to add to a losing position because you've already been proven that you're wrong, and therefore you need to get out. You need to have the emotional capacity to be like, no, I'm not risking anymore. You just let it get stopped out, or you close the account, close out the trade, but you never dollar cost average into trading. Never dollar cost average into trading. It's a recipe for disaster. I know a lot of influencers talk about dollar cost averaging, but that's purely investing. It is not trading. Okay. I guess let me get back to the Solana trade that I'm looking at. Let's just we were at the daily, so now let's see what's going on with zooming in, right? The 1 hour says that we're sitting here in a range, and that range is between 43 and 45 relatively. All right. And you can see it more closely that we've tried to break out a couple times. We've made a double top, and that double top got busted down. So boom. I guess let me do this. Dun, dun, dun. Here's the double top. Right? If you guys all know patterns, what is that double top? It is a bearish pattern. And then you would just go from the top to the bottom. And then when it broke down, that would be your entry. And it did just that, boom. It eventually got down to there. So if you're trading off the 1 hour, boom, that's kind of what happened. Again, patterns are more effective on longer time frames just because there's more time for them to wiggle around and there's much more movement inside of them, much more money. You could zoom into this one candle to so much. Like me zooming into this daily candle right here, I'm seeing a lot of movement, 24 candles to make up that daily candle. And I guess let's go down to even the 15 minute. 15 minute, boom, we're getting a little bit of a move. Nothing breaking out. I'm not seeing anything up here wise. Volume, though, there's lots of volume here. We have resistance right at the 45, which makes perfect sense. But I'm not going to put orders in until we get to that $47 mark. All right, 222. Nothing I see. 12 hour, same thing. Same thing is what I'm looking at, is right in there. So I like that trade. I do like the setup. I think I'm going to make it. So if you do like trading and you want to learn, I know that you guys can get up to 4,000 of free money to trade with. You can get $10 instantly if you use my link at Bybit. So make sure that you at least try it. If not, just try out the platform, because I do like the platform because you can leverage your money. But again, just because you're leveraging your money doesn't mean that you should be risking all of it. And let me say, Eve, subscribe UK. I move my stops up to lock in profits. Dun, dun, dun. Yeah, you can definitely lock in profits, especially when you're making stuff. I'm a big believer at half. When I make 50%, I close 50% of that trade. Okay, 50% to 25%, and I move my stop up, but I make sure I look at my stops to either where my break-even point is. If it's made now support, I'll put it down a little bit below, because I don't want to have my then break-even, stop right at the movement, right at a good support level, because chances are, that support is going to get touched and I'm going to get stopped out and it's going to bounce back off, right? You want to put your stops in a place that they're ideally not going to get stopped out unless you're wrong. That's important. So you got to think your head a little bit. Your stops are meant to make sure that you don't lose any money or more money because you've been proven wrong. Okay? This is Johnny Crypto. I'm here to help you guys make some money. Please like, subscribe. I'm giving away lots of free content. I appreciate all you guys, and thank you, B. Baker, for letting me know